Welcome to the Real P&L Trading Show, where I share my real P&L on 4 accounts, and I also share my proprietary Safe Whale strategy for free. I want to make sure my audio is working, everything's working okay. You guys, please give me some feedback in the comment section and let me know that everything is running smoothly. Also, be sure to post any questions you might have. A lot of times the questions kind of come in at the last second, and I think we're on a little bit of a delay here, so sometimes I miss those questions. Be sure to post those earlier rather than later, if you would. Okay, I'm going to move on to the earnings edge. What happened last week with the earnings edge? Remember, I've got 4 accounts that I'm going to show you, and I'm going to move on to the earnings edge. Thanks for your feedback, Scott, on the audio. This is the earnings edge account here. I did not make any trades last week on the earnings edge because of my network here. Let's see, 72.54. Let's put that and check it with the spreadsheet. It should already be 72.54 in here. 72.53, same difference. Okay, so you can see what's going on with the earnings edge since 2022. Vastly outperformed there when the market was down, grinding down, it grinded down 20%, vastly outperformed. And then we've had a couple bull markets. 2023, we're up 24% in 2023. Let's see what SPY is trading. SPY is trading 603.09. That looks like an all-time high, isn't it? 603.09, up 27%. So we went 24%, now we're up 27%. We're getting towards the end of the year here in December. Still, the earnings edge is outperforming, but on a risk-adjusted basis, maybe not so much because there is a lot of risk tied to the earnings edge, but you get the reward when you take that risk. But no trades this last week, because nothing went through all the filters. Nothing fit through all the filters for me to trade it. And if it doesn't fit through the filters, I'm not gonna trade that. Okay, let's talk about the PL5 Pro. Let's look at that particular account. This is my larger account, PL5 Pro, which is doing 527. Got a lot of these accounts here. Let's see, 527. 454, 405. Let's put that in there and see what we're doing. See how's it going there. 454, 405. So it's up a little bit. 405. So since July 19th, 2024, that's when I started the PL5 Pro. I was running the PL5. I upgraded to the Pro in the middle of July, and I'm up $50,498, up 12.5%. The market is up 9.85% since then. So both of these systems, the market's up on a tear. Obviously, the PL5 Pro is doing quite well too, up 12.5% since mid-July, up $50,000 in that account. So that's doing very well, or normal, I guess, or maybe a little bit better than normal for the PL5 Pro. Also, now I have the PL5 Pro with the S&P 500 variant, and that's I have an account here with Interactive Brokers. I started with $30,000 on this one. Let's see how it's doing. I can't really carry the whole thing over because it'll show my account number. So yeah, so it's at 32,898. Let's put that in there. 32,898. 32,898. Okay, so started this one on July 16th. Again, the Pro was just acclimated in mid-July and started with $30,000. Now I'm up $2,800, $2,900 with the PL5 Pro, the S&P 500 variant. So this one will go down with the S&P, up 9.66%. For the S&P is up 7.07%. So it's outperforming the S&P as expected. I expect this one to outperform the S&P pretty much in all markets. Obviously, I have to talk about that first leg down. Sometimes they have that first leg down, and this will underperform, but then it'll catch up very quickly. Same for the PL5 Pro by itself. It's going to have that first leg down, or it's going to go down, and then eventually it catches as the market levels off, or continues to go down, or goes back up. It will recover. Okay, let's talk about the Safe Whale now. The Safe Whale account is this one here, I believe. and it's at 53.77. That's my net lick. So I'm showing you my net lick every week, 53.77, because I think it's important to see the net lick of a total portfolio with the system that's being ran. That way you can really gauge how it's doing, because I could run the wheel strategy and do quite well, and then when the market crashes, my accounts could be down 40%. So that's something that you sometimes you don't see with other guys running that wheel strategy. Yeah, they're making good money right now, but what's going to happen when the market crashes, or sometimes even in the grind down, the wheel won't do so well. It's a bullish strategy for the most part. Okay, so we can see my safe wheel is underperforming, definitely up 7.4%, the market up 26%. So it's definitely underperforming the safe wheel. I do have about half the drawdowns of the S&P 500, so it is a risk-adjusted situation, but still underperforming. It's been underperforming this year and last year. In 2022, in that grind down market, it outperformed by 40%. So it just kind of depends on what you want. But so far, it looks like the safe wheel is underperforming here in the bull markets. And what am I trading now? I'm trading JD, and I have my put hedge on, right? Because I'm hedged, right? A level 5 trading, not level 4, level 5, where I'm hedged. So I've got my put hedge here. It's 136 days. So my first question is, do I own any shares? The answer is no. Then I want to take care of my put hedge. Is it under 100 days? No, I don't. It's not, because when it gets under 100 days, it'll lose its value too quickly, right? So I want to keep the value high. I've got 3 of these, right? So I can be long 200 shares and still be covered most of the time, for the most part. And then I also have my long call here that I paid 5 cents for, and it's the 44 call. So I have this call here in case something crazy happens with JD. I don't want to lose all of my value on my put. In fact, last week I sold my call. I think it was a $37 call for, I don't know, $30 or $40. So the call actually paid off last week. I'm not sure if you guys experienced that too, if you were in this particular trade, but the call actually paid off last week. JD's made a pretty good run. It looks like it's at 37.61. The other question is the put hedge, is the strike price within 70% of the price of the underlying? So 37.60. I want to check the hedge, see if it's close enough to protect me. 37.6 times 70%. It needs to be at 26 or higher than 26, and it looks like it is because it's at 28. So I'm okay. I don't need to move this put hedge. It's close enough to protect me for the most part, and this hedge here. So really, I'm running at this point the traditional wheel. Now that my hedges are intact, I'm going to run the traditional wheel. I like to do it 1 week out. So let me make sure I have JD in here. So these are the options expiring at the end of the week, so I can collect all this premium and then let the premium expire. And I'm going to sell a put, and this premium is pretty high. Let me check something. It might be coming into earnings. Okay, we're not coming into earnings, but the premium is pretty high, but that's good. So what I want to do is get the out of the money put of 37.50 would be out of the money, but I want to get the one that I can collect. Typically, I'll go 36.50 here, but I can't collect quite 37 cents or $37, not quite. So I'm going to bring it one back. I'm going to sell the 37 put, give myself a little bit of room. It looks like I might get around 50 bucks for it. I'm going to do one of those because I do one call or one put for every 3 put hedges, and that's for every $5,000 to $10,000 in the account. If I went to 10 to 15,000, I would do 2 and 6. Okay, so let's see, the mid price here is 52. Let's see if I can get $52 or 52 cents. Yes, so I got filled there. So that's pretty much it. I'm just selling the put, just beginning the wheel. Now that I'm hedged, right now I'm just beginning that wheel, just starting at the traditional wheel once I'm hedged. All right, let's see if there's any questions or comments. Scott says audio is good. I appreciate that, Scott. Avery says she's first. And let's see, less is more. Do you ascribe any considerations in your strategies to things like Santa Claus rallies? Avery and I were just talking about that their Santa Claus rally is coming up. That's more of a fundamental analysis, which I don't take into account. I'm purely statistical. I don't really pay attention to TA, technical analysis, or fundamental analysis in my decision making. I make it to where it is mechanical, so I don't pay attention to that stuff. I do pay attention to it, but I don't make decisions based on it, I should say. Martin, which guides would you recommend for position sizing for different strategies? Well, it just depends on what strategies you're talking about. If you want to be a traditional level 4 trader, and maybe you're doing a spread, a credit spread, or a defined risk spread, and you want to put on a whole bunch of positions, which I really don't advocate. Maybe you're going to do 2% of your portfolio risked per position, but that means you're going to have a lot of positions on, and the problem with that is it creates too much complexity. And when you have that crash scenario, you've got 25%, 20 positions on, and you got to figure out which ones you're going to pay attention to first. So I don't. But if you're just talking about that type of thing, maybe 2%, maybe a per risk per position, but I don't really like to trade like that. So I don't know if I answered your question there. Hopefully I did. Less is more. I cashed out on my JD Long when it hit more than 10 times. So 65 cents. Oh, you did better than me. So I got like, what, 35, 40 cents for it. And you got 65. That's nice. So you did better than I did. So you collected on that long call. But that doesn't pay off very often, but every once in a while, that thing pays off. So you can see here my put is down $145, but I did collect around $40 on my long call to kind of cover this this loss here. Well, it's not a loss yet, but this net lick. Will, your Profit Without Panic series is really good. Yeah, it did. I went into the studio for that one. I had a lot of really good content, and I broke it down into little pieces. Right? I didn't tell you everything at once, so it's broken down into little pieces. It's going to end up being probably around 25 to 30 videos. And I think I'm on maybe the 8th or 9th video that I've released, because I've got the reason why I haven't released them all is that I did this shooting all in one day, and then I need to do all the editing, which the editing takes a long time. Just to edit one video takes some time. So I'm just editing as I go and then releasing them. Honest Investor, my November 29th put at 34 got assigned and obligated me at 100 shares, but at the 37 strike and not the 34. The purchase is supposed to be at the SP sell put. I'm confused. Okay, so let me see if I can understand what you're saying. You sold your 34 put and you got assigned. So now you own shares at $34. So your goal at this point is to sell a covered call against that. And you want to get, you want it to be at the $34 range or higher. So let me see if I understand. The purchase is supposed to be at this SP of the sell put. Okay, I'm not sure. Hopefully I can, if you ask a little more detailed question, I might be able to help you with the safe wheel on that. But it sounds like you got assigned that $34. So I'm assuming JD, let's see, if you were to go to sell the 34, if you're going to assign that $34 and you want to sell the call, you should be in the money. Yeah, maybe get a little more clarity on that question there. Will says, so far it's paid off 1 to 2 times a year and more than paid for itself for the year. You're talking about the long call. Yeah, I haven't really tracked those numbers in detail, but that sounds about right. Maybe 1 to 2 times a year and then paid for itself. Because how much does it cost? We're paying $5 a week, so 52 weeks. What is that? 5 times 5, $250. So I don't know. Yeah, hopefully it does pay off, but it's there to protect me in that crazy event where there's a takeover. For example, JD got some type of takeover event. Will says, nice work, very professional look on that series. I appreciate that, Will. Thank you very much. Yeah, on the Profit Without Panic series. Honest Investor, the buy of the 100 was supposed to be at 34. Okay. Did you sell the $34 put, or did you sell the $37 put? So wherever you sold the put, that's going to be where you're going to get assigned if the stock goes down below that. So you shouldn't have got assigned because last week the JD went up higher. So unless you sold a put that was in the money, you probably did not get assigned. Plenty of premium on the JD calls. Yeah, for sure. There's some nice premium in here. The obligation to buy 100 shares is supposed to be at the $34 strike. If you sold, that's right. So you were obligated and they're not going to obligate you for taking on those 100 shares unless JD falls below 34. And as far as I know, last week it did not fall below 34. So therefore, you probably sold a put, collected that premium, and you got to keep it. And now you're just coming in today like me with no positions. I just have my hedges on, but I don't have any shares to sell covered calls against it. I can sell another put. That's what I did. I sold another put. So last week I sold a put, then the stock went up a little bit, and I sold another put this week. And I'll just keep selling puts until I get assigned. And Avery says, hey guys, hit that like button. I'd appreciate it if you do hit that like button. It would help with the channel, help spread the word, and help. What I'm trying to get out there is I want the instructors that say that claim that they're profitable or they're making money. I want them to start sharing their P&L, because if they're not sharing their P&L, then you can kind of fudge the numbers. And my goal is to get everyone to share their P&L if they're an instructor. And if you hitting the like button would help that, because the more exposure I get, the more that I can get that out there for other people to ask their instructor to share their P&L. So you guys should ask your instructor. Don't ask them to share their P&L. Ask them if they believe their instructor should share their portfolio P&L, and see how they react to that. It's always interesting, the reaction I get when I ask that question. But you see my P&L right here. All right. Okay. Looks like we are coming to a close here. And in parting, I like to say, if the P&L is not real, what else are they trying to conceal? I'll see you guys next week.